So let me start today's video by telling you three very short but very important stories regarding stock markets. This will help you gain a fundamental understanding about dividends. So the first story is about a company called as Majesco. So Majesco is an insurance technology provider, and in 2020 it decided that it is going to give massive dividends. So it gave out massive dividends for which the yield was approximately 1000%. I'm talking 1000%. The yield was 1000%. The stock was trading at approximately 250, 300 levels. Then it rose to approximately 1000 rupees. Then now it is trading at 90 rupees. So a company that gave massive dividend, it has now almost tanked. That's one. Second story is about a company called as ITC. Now we all know that ITC has very stable cash flows. I have made a separate video on it. You can go and watch it. So ITC has very stable cash flows and it gives dividends every single year in the range of 5 to 7.5%. So very stable cash flows, gives a lot of dividends, and ITC has been a relatively stable company. Third company is Google. Google gives zero dividend over the last 15 years. This is how Google has grown in terms of its portfolio size. So it started out at $6.138 billion in 2005. Now the valuation is $220 billion. I'm talking about billion, not million. So it's at $220 billion. This is amazing. So three different type of companies. One gave massive dividends, it tanked. Second is a stable company with stable cash flow, gives out dividend regularly. And third is Google. It does not give any single rupee in dividend, but the company itself has been growing. So what type of company should you be investing in? Now many of you would say that, hey Akshat, we are not interested in playing the individual stock game. We are mutual fund investors. So why should we even listen to this video? You should listen to this video because even your money in mutual fund, it gets invested eventually in stocks that either pay dividends or do not pay dividends. So on this video, we are going to essentially understand three things. Number one, should you be buying stocks that give out regular dividends? That's one. Second, we are going to take a look at how you should develop your portfolio. How many dividend giving stocks you should have in your portfolio. Third, I'm going to talk about how I am investing in dividend giving stocks. So let's understand the entire concept of dividend. Very important video. Please stay tuned. Please watch it till the very end. And just for fun, now I will start putting trivias in the description box. So today's trivia is, check the description box, but today's trivia is that tell me that why do PSU companies give out a lot of dividends? I will post the answer sometime tomorrow. It will help me understand that you're intuitively learning some things from these type of videos. Press the like button and let's get this video started. So number one, let us try to understand that why is it that companies pay dividends? Now essentially whenever you are buying a stock, so let's say that you are buying ITC or HUL, what are you doing? You are buying a business, right? You are buying a business, you are not just buying a stock. Stock is just a representation of a business. When you go and buy an ITC stock or Hindustan Unilever stock or Tata Motors stock, you are essentially buying what? You are buying a business. This is a very important point. Now, every business, be it Tata Motors, be it Hindustan Unilever, they grow with time. It's like a living human being, right? So it grows. So businesses also grow, they change the nature, and therefore it is very difficult to predict how a business is going to do. So now let's imagine a case that HUL, right? Now HUL has been a very stable company. It has been growing over the years. So what they have is that they need to grow, right? Every company needs to grow. Every human being needs to grow. So essentially, what is HUL trying to do? What is the eventual goal of HUL? HUL's goal is to grow, right? That is what a simple one-word answer here would be. Now, how do companies grow? So companies grow by taking money and investing in new projects. For example, instead of 5 factories that HUL currently runs, it might start running 100 factories. For that, it needs to put in more money. It needs to invest, right? So this is called as project financing. Project financing, right? I'm explaining it to you in very simple terms. This is almost an MBA class. Give it a thumbs up. MBA is very expensive. All this knowledge is free. Now, how are these projects financed? So first option is that HUL can go to a bank and it can take loan from a bank and it can pour in money and finance the project. But HUL is already a big company. It does not need a loan. So it mostly funds its projects from operations income. Right? So you must have seen on the balance sheet that there is something called as operations income. So this operations income actually finances their projects. That if HUL has to go from building 5 factories to 100 factories, it can literally pick up its operational revenues, all the stuff that it is selling in a year, whatever money is coming in, it can pick up that money and use it here to grow their business, right? So this is called as project financing. Now every project finance has something called as IRR. It is called as internal rate of return. Don't worry, right? I mean, you will understand all these things very intuitively. So internal rate of return, I've given this example before, that internal rate of return means that, for example, my internal rate of return is 15%. Why? Because I believe that I can grow my money, whatever I am putting in the stock market, at 15%. Now, will I go and invest in an FD? The answer is no. Why? Because FDs only give me 6-7%. My internal rate of return is 15%. So I will make the investment in the stock market because my IRR is 15, which is much higher than the FD returns. Now, if someone else's IRR is 5%, they will say that, you know what, Akshat, we don't want to play this stock market game. We will simply go live a peaceful life and invest in an FD. They are not incorrect, I am not incorrect, right? Both are fine. Similarly, companies also have their own IRR while making these project financing decisions. So many a times what happens is that HUL, for example, in the current year, let's imagine that it earns 100 crores, right? Now it is sitting on all this cash, right? And now it is not getting any projects that it wants to invest in. It is saying that, you know what, we have already built 100 factories now. We don't see any point in building the 101st factory, but we are sitting with all this cash. So what do we do? So then they give it out in the form of dividends to their shareholders, right? So this is the money that you get in form of dividends. This is an oversimplified explanation. This is something that I will hope that you will remember, that if company is sitting on excess cash and it does not know what to do with it, it does not have more projects to finance, which will serve its IRR. It just tells the investor that, you know what, just take this money and go and invest yourself, right? So this is the reason why companies declare dividends, that they do not have better project financing opportunities or investment opportunities. They just go and tell the shareholders that, hey, take your money. We have made a lot of cash this year. Just go and invest yourself in different projects, FDs, stocks that you deem fit. This is the primary reason why companies declare dividend, that they do not have better reinvestment opportunities. Now answer in the comments that what do you think would have happened that if HUL would have just kept this 100 crore rupees in their bank account, right? They would not have invested it. This money would not have grown. It would have just been sitting in their bank account, eating junk, right? In current account, you get 0 interest rate, by the way, right? So this is a very interesting fact. So I run multiple companies and the current account money that is sitting in my bank account, I get 0 interest rate on it. So similarly, if HUL is keeping this entire 100 crore in cash flow in their own bank account, they are making 0 rupee on it. Due to inflation, next year, this money will come down. So therefore, it's better to declare the dividends. So this is the number one reason. Now there are multiple other reasons that it acts as a signaling effect, that if a company like ITC, it gives out dividends, it tells the shareholder that, you know what, this company cares about their shareholder. People feel really good that, hey, we are getting dividends from the company that we have invested in. They feel like a family member. So it acts as a signaling effect also. So these are a couple of very basic reasons why companies declare dividends in the first place. Now second, let us try to quickly understand that, hey, is it a good thing that the company is paying dividend, or is it a bad thing that the company is paying dividend? So let us understand this from an example. So right now ITC is trading at 208.6. So you as an investor, how do you make money? That if this share price goes to 220, you will be making money approximately 11.4 rupees per share, right? Or if the company is giving you dividends, for example, if you take a look at here, this particular tab, the dividend returns are higher than FD because ITC usually has a dividend yield of 6 to 7.5%. These are the two ways in which you are making money as a shareholder. Now, is it a good thing or a bad thing that the company is paying dividend? My short answer is that it does not matter, right? Now, you would say that, you know what, Akshat, I have heard of Mr. Warren Buffett. He invests in companies that pays a lot of dividend and he has strongly advocated it. Yes, he has advocated the fact that you should go and invest in companies that are paying regular dividends because according to him, this is a good sign that if a company has stable cash flows, right, and if it is giving out dividends, that's a good sign of a stable business, right? He's not investing in companies because they are paying dividends. He invests in stable businesses and they end up paying dividends. Let me just very quickly, right, without spending too much time here, let me show you the financials of ITC and you will see that how stable a company this is. Even during pandemic, its sales actually rose, right? So from 45,000 crores to 50, 52, 51, approximately the same, 51,905, and profits have been somewhat stable again, right? Very stable growth. It has stable growth, therefore it has option of giving stable dividends. Similarly, Coca-Cola gives a dividend of 2.5%. Now you will say that, hey, Akshat, FD returns are like 7% in India. Coca-Cola is giving 2.5%. What's the big deal? Actually, there is a huge deal. In the US, the inflation is very low. In India, inflation is massive. It's up to 5-6%. So, the 2.5% of dividend in Coca-Cola, in which Mr. Warren Buffett is an investor, that in real terms comes out to be more than ITC's dividend. That's a very interesting fact. Now, just for fun, I will put a picture here of companies in India that are paying massive dividends. You will be very tempted to invest in companies like Polyplex. It gives a dividend yield of 17%. NLC, PNB, like 14%, 13% yield. It's massive, right? So, just look and zoom on this picture for fun. It's very, very interesting. This will give you an understanding of what type of companies are giving dividends. Now, just to complete the thought process there, that hey, is it a good thing that the company is paying dividend or a bad thing? It really depends on the type of business, but generally speaking, it does not matter at all. So let's imagine that ITC in total was paying a dividend of 100 crores in total, the total dividend that needs to go out to all the shareholders. So if it was 100 crores, now in case ITC decides that, hey, you know what, we are not going to pay dividends on this, then what happens to this 100 crore? It gets added to their balance sheet, right? It gets added to their balance sheet, and that further propels the price of the stock, right? And what did I tell you earlier? That how do investors make money? Either the stock prices go up or the dividend yield goes up. So if they are reducing paying the dividends here and this is going up, then honestly it does not matter. What matters is that how productively, and the economic concept pertains to the productive use of capital. Productive use of capital, right? Now, if this 100 crore rupee can be used by ITC to generate a growth of, let's say, 10%, right? 10%. And you, if they pay you 100 crores to you or me, right? And if I can generate 15% on it, then am I better off taking the dividend or not? The answer is yes, right? But if you are an FD investor and you are making only 7% and ITC is growing your money at 10%, then are you better off or worse off? The answer is that you are worse off. So it does not matter if the company is paying dividends or not, as long as they are reinvesting your money. Your money is that the cash flow that they are making. Now you're the owner of that money also, right? You are the part owner of that money. If they pick that money and are able to grow it, then you will anyways benefit. So it doesn't matter from that angle. So I hope that this complex topic is clear to you. Now just to consolidate this point further, here is another table that I would want you to take a look at. And this has names of some of the biggest companies in the world that have exhibited massive growth. If I ask you to name top 5 companies in the world, few of them will be on this list. They pay zero dividend but have exhibited massive growth. Their share prices have gone up and they have benefited investors. So for example, Google, Alphabet is Google, and they do not pay any dividend and their growth has been massive. Same goes for Amazon, same goes for Alibaba, zero dividend. Same goes for Facebook, zero dividend. But you will start seeing certain trends, right? So this is important to decipher, and this brings us to point number 3. Point number 3 is that there are certain types of businesses that pay dividends versus not. Right? And this ties into what I was explaining earlier. Now, if you take a look at that chart that I just showed you, Amazon, Facebook, Google, Alibaba, zero dividends. Why? Because these are tech firms. They have great investment opportunities. You might have heard that in Reliance Jio platforms, Facebook, Google has made massive investments. These are investments. They need money, so they can't pay it out in dividends. They are saying, Facebook, Google, Amazon are saying that we are growth companies. We will anyways grow your money. So what will you do by taking the money? Give it to us. We will grow it for you. So that is what is happening with these tech companies, and they are somewhat justified. Now, on the other side, and please take a look at the trivia because this is where the answer emanates from. If you take a look at utility company, right? For example, electricity generation board or very, very stable companies, they give out dividends. Another feature is that if the company is very mature, right? Then it might start giving out dividends because the company has grown from this to this. It is already very big. It does not have any new investment opportunities. So it starts giving out more and more dividends. So just to conclude this point that, hey, is it good? Is it bad to invest in dividend giving companies? It does not matter. What matters is that you're picking up quality businesses here, right? In the first type of business, which are stable, cash flow, utility type of businesses, and type 2 businesses, which are technology, growth oriented. I have said earlier in my multiple videos that you should invest in what? Growth stocks. Plus you should invest in stable stocks or defensive stocks, right? This is the same concept here, right? Explained in another way through dividends. So Warren Buffett usually tends to invest in these type of companies, right? Which have stable cash flows, Coca-Cola type of companies with organic growth. He hardly makes any investment in tech companies. So I hope that this concept is clear, that you should have both stable defensive stocks and aggressive and growth stocks in your portfolio. It is very important. So this brings us to the next point. And here we need to understand that what are the pros and cons of dividend. right? Pros and cons of dividend. Now, there are 2-3 key points that I would like to cover here. So first is regarding your age, right? So if you are someone who is at a older age, so if you are, let's say 45, 50 plus, and you require a stable income source where you do not have to do SWP, systematic withdrawal plan, or if you're doing a systematic withdrawal plan, then you should pick up stocks that are dividend giving, right? For example, my mom and dad, they deliberately ask me that, hey Akshat, tell us. They don't say, hey Akshat, they just say, okay, come here and tell me this, right? So essentially, they invest in dividend giving stocks. They ask me that what dividend stocks they can buy, and it makes sense at their age to invest in more dividend oriented stocks. That's one, right? If you're young, fairly your portfolio size in dividend stock should be less, right? You should be more growth oriented. That's point one. Point two is around tax treatment. Now, without becoming a CA, I'll just explain you the basic funda about taxation on dividends. Up until last year, there was something called as dividend distribution tax. Now, this was levied directly on companies. For example, if ITC used to give out a dividend of 7.5%, ITC used to file dividend on your behalf, right? So there, the tax treatment was on the lower side, that you used to pay less money. Now that rule has changed, and now dividends become a part of your income. So if you're a high earner, it is a bad move for you. So the more dividend stocks that you have on your portfolio, the more tax that you will have to pay, right? Now I'm not a CA. I will not get into the taxation treatment here now, but simple, easy to understand lingo that nowadays government wants to make more money, so they will keep on taxing you more and more. So this is one more hatkanda of the government to tax you more by turning around this DDT rule, right? Dividend distribution tax rule, and linking it to your personal income tax now. So you end up paying more in dividend stocks. But having said this, there is a massive benefit in terms of owning dividend stocks, right? One is that if you are owning good dividend stocks, then your cash flow gets stabilized. So for example, if you're paying EMIs on your house, and if you know that every year I'm getting a stable cash flow from ITC dividends, then it's fine, right? I mean, there is a sustainable source of income for you. It becomes like a passive source of income for you, right? It becomes like a passive source of income for you. You don't have to work for it. Company works for you and they give you dividend. It's good and reliable source of money. So it's good from that angle. So this brings me to the final part of the video, that what is it that I am doing in my portfolio and how am I going about investing in this? So yes, I have shown it earlier that I follow the principle of diversification. I keep cryptos, I keep real estate investments, I invest in aggressive stocks, I invest in defensive stock, stable stocks. In fact, if you watch my analysis of ITC, you will understand that I have invested in ITC also. Why? Because it's a dividend giving stock. So I need a little portfolio where I know that I'm going to get reliable cash flow, and that is the reason why I hold ITC. Now, if you're good at stock picking and if you're a seasoned investor, go and like me, buy ITC and similar dividend giving stock and optimize your portfolio. Otherwise, my suggestion is, now depending on your age, you must have around 15 to 25% of your entire capital in dividend giving stable stocks, right? So what are these stocks? So I think Smallcase has done a wonderful job on it. If you just go and type dividend aristocrats, this is a very good small case for you to consider. You can do a simple SIP and start investing in it. You can take a look at the stocks and rates. These are excellent companies. Asian Paint, brilliant. Bajaj Finance, very good. Pinolex, excellent. HDFC, Housing Development Finance Corporation. It owns a part of HDFC Bank. Wonderful company. Good mix of company. ITC, right? Nesco. All these are very, very good companies and they pay dividends. So you must dedicate your portfolio on these type of stocks. So I hope you found this video to be useful and informative, and do check the description box. There is a trivia question. I would want you to answer that and I will post my answer tomorrow. So I hope you enjoyed the video. Please give it a thumbs up. Helps with the YouTube algorithm, and share my videos with your friends. A lot of you have been reaching out. They have been saying that you love my videos. So thank you so much, and do keep supporting, and I will see you tomorrow.